I'm going to go a little bit farther back in time. This is a year-long chart. I'm going to go all the way back to 2 years. You can see that this guy's got a nice sideways movement. And I like the choppiness because that lets me leg in and out of different positions over the months in order to basically squeeze out as much revenue using the power of options, right? And so right now, even though it looks like it's in like a medium term downtrend, overall, it's just seems to be at the bottom of its current price action. And so I'm looking for an opportunity. Again, I'm going to wait for my signal that a bottom has been found. So I'm not, I'm going to be looking this upcoming week, but I'm looking for an opportunity to somehow get an initial covering position in place on SunRun. And that would either be buying a stock, so I could buy shares of SunRun. It's trading around the $16 mark. And so I want to buy those shares in lots of 100 in anticipation of selling premium at a future date. So I can totally see myself buying some stocks. If I want to start the premium selling ahead of time, instead of just buying the stock outright, another option for me would be to start selling cash secured puts. So if I was to sell a cash secured put, all that means is that I jump in here, I look at like July 21st, and I pick a price that I'm willing to pay for shares of Sunrun. So say for instance, I'm willing to pay $15 per share for Sunrun, and I've got that $15 in cash lying in my brokerage account, and say I want to do 100 shares. So I have what, $1,500 sitting there. I'll go ahead and sell this cash secured put at $15 and I'll immediately get 20 cents per share. So I'll get $20, right? I'll get $20. And if between now and July 21, somebody wants to go ahead and sell me this stock that's currently trading, well, it's currently trading at $17.22. But if they want to sell it to me for $15, they can. If I get to July 21 and they nobody wants to sell it to me for $15, that's fine. Either way, I get to keep that $20 or that $19.50. It's changing as we speak since we're in a live market. I get to keep this money. And I can do that over and over and over until somebody's willing to pay or willing to sell me the stock for $15. So that's another way if I want to start collecting those premiums in advance. Otherwise, I could buy the stock outright if I, like instant gratification. Either way, uh, that stock will act as a covering position for me to go ahead and sell premium in the future. One other way I can set up the initial covering position if I want to incorporate some leverage is to go pretty far out in time, like I'm saying go as far out as June of next year. So about a year from now, June 2024, they have options expiring June 21st on June 2024. And you can buy a deep in the money call option, maybe this $5 strike price. And it looks like the open interest is quite low, which would usually be an alarm bell. But it also looks like the bid ask spread is very small, which tells me that the market makers are okay with providing liquidity on these back month deep in the money options. And so instead of buying the stock, if I wanted to uh, spend a little bit less, I could instead buy one of these out far out in time, deep in the money call options, and that would also act as an initial covering position for me to sell premium in the future. So either one of those things is what I'm looking to do, only if I see a bottom being found sooner than later.